Rick, thanks again for joining us and Happy New Year.
Always a pleasure. Best of the season to you.
Yes, we're here at Cambridge House, Resource Investment Conference. The mood here is surprisingly upbeat. What's your take on how we're starting off the year here with investor sentiment?
I would say that the mood is ebullient. There's a lot of people here. The spirits are very high. We'll see how all of that plays out. I think their optimism is well-founded. The commodities are still reasonably priced but headed higher. The equities are reasonably priced but headed higher. There's good opportunity in the sector, and there's good money available to fund those opportunities. In the sort of fairy tale parlance, the water isn't too hot, the water isn't too cold, the water's just right.
Perfect. Well, what's interesting as well, Rick, is that you've talked a lot about money returning to exploration, and that exploration plays are becoming more interesting. Why is it that you see that? They've been so beaten down.
First of all, precisely because they are beaten down. In a cyclical business, bear markets are the authors of bull markets.
Yes.
And we went through a spectacular bear market, which generally involves a snapback. The second thing is that as an industry for a very long time, we have underinvested in exploration, and we've also invested poorly in exploration. So the exploration and development pipelines of the major mining companies are stretched very, very, very thin. The money has to come back into exploration, and because it has to, it will. But the other thing is that investors' minds, speculative investors' minds, are focused elsewhere. They're focused on 2 year ago stories, the development stories. Everybody fights the last war, which is why most people lose wars. The ultra-speculative money is also focused in other sectors. Marijuana would be an example. The cryptos would be a different example. So there is a paucity of high-risk money, which means that the exploration sector hasn't attracted the attention which the arithmetic associated with the need for exploration would suggest that it's due. I love that. The idea that I can compete in a sector where nobody shows up to run against me suggests that even a fat old 65-year-old can win the race if he's the only guy that shows up to run.
Well, we'll leave that aside. Any exploration plays that you like right now? Any exploration stories that you're interested in?
My particular theme in exploration is, and has been for 30 years, the prospect generators. The people who use their technical and commercial acumen to generate exploration concepts and then fund them by joint venturing to third parties. That bores many speculators who aren't interested in statistical probabilities, but are rather interested in a good narrative. What I've learned myself is that you can't spend or eat narrative, you have to spend success. And the statistical track record of prospect generators relative to any other method of exploration finance is absolutely sterling. The big names would of course be names like Altius, Eurasian, Lara, Riverside. The people have been doing it for 10 years. But there's really a community of about 20 public prospect generators worldwide that, if past is prologue, which it always has been, can be expected to generate rates of investment return that are 3 standard deviations better, not 3 times better, 3 standard deviations better than the expectation that you would have from the market as a whole.
Yeah, interesting. Now, Rick, I have to get your take on cryptocurrencies. You'd mentioned them before.
Sure.
Now, I find it interesting. You like volatility in the market, but you don't hold any Bitcoin yourself. Why is that?
I did hold some Bitcoin.
You did, okay.
I am old enough and successful enough that I invest in things I understand. And I didn't understand Bitcoin well enough, and in particular, I didn't figure that the depth of my understanding was such that I had a competitive advantage over somebody else. Now, I'm competing with speculators that don't care about their competitive advantage. They like it because it went up. The truth is that if a narrative is true, and if the narrative doesn't change, but the price goes up 10 times, the investment at hand is precisely 10 times less attractive than it was before the price rose. So I would point out to people that the backside of a hockey stick graph is just as steep as the front side. Having said that, we at Sprott have been investing in blockchain technologies for 3 years. Not because we wanted to have some hot ICO, but rather because the distributed ledger and the blockchain has the potential to make, as an example in the gold business, the transfer, ownership, and registration of gold a lot cheaper than it otherwise had been. So I'm fascinated with blockchain and crypto technology, and I'm fascinated from a social point of view.
Yes.
I'm a consumer of currencies. I live in the United States, I live in Canada, I spend Canadian dollars, I spend US dollars. As a consumer, I want there to be many currencies competing to offer me utility.
Yeah.
So Bitcoin is great there.
Yeah, yeah.
Further, at Sprott, we are today in the soft launch of what we think is the first token in the world that is 100% gold backed, with the gold held at the Royal Canadian Mint, and is also redeemable.
Okay.
We think that this, and I'm not saying it's going to, but we think it has the potential to revolutionize the way gold is stored and traded.
Okay.
It's useful to us that this viewpoint was authenticated, we hope, by Goldcorp, who became our partner.
Okay.
And we hope to be able to announce in 10 or 12 days that a second of the top 5 gold mining companies in the world will also be partners in this endeavor, hopefully paying their dividends ultimately in gold coupons.
So that's interesting. So we often hear gold versus Bitcoin,
Right.
whereas now we're seeing gold companies investing in cryptos.
Well, not in Bitcoin, but
No?
rather in the blockchain technology,
Okay.
the technology that allows for the settlement and authentication on a distributed basis.
Yeah.
You don't have to trust a government, as an example, because the authentication system is open sourced and private. The trust remains, but the downside of trust goes away.
Yeah.
The technology we love. I don't have an opinion about Bitcoin. As a consequence of a speaker here, Tika Tawara, who I know and love, Tika talked me into buying it at 400. When Bitcoin went to 800 and I couldn't explain why, I sold it.
Okay.
I'm happy about that. Do
Yeah.
I wish that I would have sold at 18,000? Of course. Does that matter to anyone? No.
Yeah. Well, Rick, before we wind up, let's get your take on gold. Gold's outlook for this year. Do you think that there will be an outflow of investors from the crypto sector and maybe even from cannabis into gold, or is there a
No, we're still
price
seeing
target
seeing retail disintermediation out of gold.
right?
What's happening that's interesting is that the retail sellers are selling to very strong buyers. It's very unusual to see retail disintermediation, retail selling in the face of market strength. This is an extremely bullish sign. It's also useful to see gold do relatively well, which it did in 2017, in a period in time when there's no economic fears expressed by anybody. The volatility index is at all-time lows. Liquidity, some of it fake, is at all-time highs. And the fact that this confidence is present in the market, and despite that, gold is doing well, is an extremely bullish sign for gold. Now, I'm not one of these who says 2018 will see $5,000 gold or any of that kind of foolishness.
Yeah.
From my viewpoint, the pace at which the gold price escalated in 2017 was wonderful. 7 or 8% compounded over time is a spectacular thing. And it's important to note that the 7% increase in the gold price can generate 25 or 30% compound increases in the profits of companies mining gold.
Absolutely. Rick, thanks again for taking the time with us.
My pleasure, thank you.
Best.